Hey everyone, welcome back to another live trading recap video. Today is going to be a little bit different from our usual formula. Not only are we going to be showcasing the Polarity Assisted Trading Interface, or Polarity ATI for short, but we are also going to show you guys when to not enter. Previously, I have only highlighted entry cases, but I want to be specific on how to filter out bad trades and when the best times to trade are. So the way the Polarity ATI works is that it enters on 3 stacked imbalances with an allowance for a 1-tick gap. It has the same level of configurability as the Analytica Chart 3, and it requires it to function. The special aspect of this system is that it has an arming system, so that you can arm and disarm the strategy for one or both directions at once. The resting state is disarmed, so you're safe from any accidental entries. There's a full instructional manual included with purchase, which has everything you need to know about how to trade this system and how to adapt the settings for any market regime. This is an all-inclusive product, meaning it is a full trading system meant to be adaptable to any market condition. We have been vigorously testing this system in many market conditions using backtesting and forward testing for the past 2 months, and we've had some exceptionally good results. One of the best aspects of having a semi-automated trading system is that although it's you calling the shots, this system is faster than any manual trader by a long shot, and you'll see what I mean as we continue this footage. So let's get to the footage that's showing on the screen right now. It's currently about 5 to 10 minutes after market open right now, and we actually already had a trade. When it bounced off of that 4140 level, we decided to wait until we saw positive delta, and then we armed the strategy for long only. We got filled pretty quickly, and then once again after that, we had no real reason to disable the strategy, so we rearmed it for long. Once we got filled on that second strategy, we decided to continually arm that again for long, but once delta turned negative, we decided to disarm it. There was also an absorption level at this point from pre-market. Although price did not end up breaking through this point, we still wanted to disable it as we saw that stacked imbalance go through right there just for a second, and then it disappeared off on the short side, as well as the fact that it just wasn't really a good high probability area. We already filled on 2 trades on 10 ticks with 5 contracts, so we decided to just cut right there. It's currently about 10 minutes after our last trade, and as you can see, there are a lot of stacked imbalances, but it was in this range right here. Remember, like I said earlier, the default resting state of your strategy should be disarmed. A lot of the times the market is not trending in a certain direction and it's going to be in a range like right here. When you spot these ranges, you're going to want to stay disarmed until you see a breakout or some kind of delta divergence on one side. So as you can see there, we got a small almost breakout. However, that bar didn't close above that absorption level we had marked prior. However, this next bar does do that, so we arm the strategy for long only and we wait for an imbalance. An imbalance immediately appears for 2 bars forward. We get entered in really quickly and almost immediately filled. Speed is exceptionally important for trading stacked imbalances, and I guarantee you if you're trading this manually, you're going to run into a lot of areas where you're just not quick enough to spot the imbalances. No man can stay behind the screen and just constantly be paying attention and enter instantly when they see a stacked imbalance. This system is supposed to allow you to focus on the decision-making aspect of trading, not the trading execution. That's left to the machine, and you tell it what to do and it executes it perfectly. Circling back there, we rearmed the strategy for long because we saw that the delta continued to be positive as well as price continued to move in that uptrend. We do get stopped out on that trade pretty quickly, however, we didn't do anything wrong on that trade. Things like that happen, and if anybody tells you there's a 100% win rate strategy out there, they're lying to you. That's happening, and I'm going to be really transparent of when I lose, and that was one of the times where this trade lost. However, what I can tell you is that if this strategy is traded correctly, it will give you an exceptional edge. After this trade, we see a pretty clear range forming, or at least the trend stops. We can see this happening pretty easily just by taking a glance at the delta and comparing it to price. Although there isn't really any consistent way that price and delta are moving. There's not really a correlation. If there's no correlation between delta and price, then you're probably looking at an area where there isn't a trend, and you're probably going to want to disarm the strategy. A strategy is already disarmed by default, so we're fine. We're waiting for a breakout in a certain direction before we enter long or short. Once again, I want to show you guys that I am clearly visually marking absorption levels as we continue. I leave these on the chart until they become irrelevant. So if you guys have this tool, it's actually accessed with Shift plus F2 on your keyboard. With any version of NinjaTrader, you guys can use that and draw lines really quickly and easily. We actually are in that range for an entire hour until we see an area where there is a little bit of a breakout. See, it bounces off this level a few times. However, we see that negative delta start to overcome, and we wait here. We wait for it to close below that level of absorption before we arm the strategy for short. And then really shortly after that breakout in the downward direction, we see that imbalance form and our system spots that immediately and enters us short. It disappears for a little bit there. However, it continues to be an imbalance or a stacked imbalance, and we stay in that short direction. We get filled pretty quickly, and then we want to keep that strategy armed because we see that price movement in the downward direction, and we want to continue capturing as much alpha as we can. When we see these trends where there are continuous levels of negative delta, we want to capitalize that on as much as possible. Most of your trading gains are going to happen within small little 15-minute blocks, where you're going to see lots of movement happen and in a really, really consistent direction. And what's great about this system is that you can actually find when these movements are going to stop. So as we continue seeing here, you're going to see that delta slowly decrease, and then you're going to see it bounce off of key levels that we had marked before. We get entered again short on this position. We end up getting stopped out. So because we get stopped out there, we're not as eager to rearm the strategy. However, that downward direction does end up continuing, and you can see why right after this. We're going to mark key levels on this point right here, and then once it breaks out in that direction, we're going to want to arm it short. If it broke out in the long direction, we would not arm long because the market doesn't really like to move in straight upward V movements, especially with range charts. You might see a lot of somewhat V movements on minute charts or second charts or whatever, but you're not really going to see that kind of thing with range charts, because what's really, really great about range charts is that you're focusing just on price movement. It takes out the time aspect of it because the market doesn't really care what time it is. There's no aspect of the market that affects time. Auction structure is not affected by what time it is. So it's just going to be price, delta, and order flow. That's all you need to be successful with trading, and I'm going to show you guys here why. When it bounces off that level, we're going to wait for it to close below that bar. Once it closes below that bar, we arm short. As you can see, a little trade opportunity did appear there, but because it's not below that level, we didn't take it. However, it closes below right there, we arm it short, and now we just have to wait for a stacked imbalance. I get a lot of questions asking about what settings I'm using on a day-to-day basis, and to be completely honest with you, the ratio doesn't really change that much unless I'm trading a different instrument. But on ES, I pretty much like to stick with 0.35. However, what does change is the range, take profit, SL, and the minimum volume required to see an imbalance. I switch a lot between 50, 100, and sometimes 150. What you're going to want to see is that when volatility goes up, you're going to want to change your take profit, stop loss, and range amount. And when daily volume goes up, you're going to want to increase your minimum volume because you need to compensate for that extra level of noise that's happening because that volume is increased. The ratio is going to want to stay around the same level. I don't really like to go below 0.35. It's a little bit too sensitive, anything below that. However, if you guys are just starting, I would probably go for something a little bit higher, like 0.45. But I really only go that high when I'm trading a 15 range chart or sometimes even a 20 range chart. You're going to see a lot less trading opportunities. However, it'll help you guys get the feel for things and maybe filter out some more trades that are in ranges that you might not have spotted yet because you're new to spotting these kinds of order flow based ranges. Circling back to what's happening in the video right now, we saw that breakout in the short direction. Again, we rearmed short, waited for an imbalance. We got entered pretty quickly. The imbalance disappeared. However, delta continues to be negative, so we stay in the trade. What's interesting about this is that you're going to want to stick with trades even when the imbalance disappears once you're in, unless delta switches to positive, especially if price starts to stay the same. If price is around that zero level where that bar opened and delta's starting to move in the direction against you, you might want to close out that trade early because your success rate probably just dropped significantly. If you were watching earlier, you might have noticed that we didn't instantly rearm the strategy after we got filled. We waited to see what price action was doing. Because this is such a long downtrend, you're going to start to see small little pullbacks there. We wanted to make sure that wasn't a real pullback, so we waited. We saw it bounced off of a level, we marked it, and then we marked a previous level of imbalance. If it went above that, we would decide to not rearm again. However, it closed below that level we marked, and then we decided to rearm it for short. And then we got another entry about another 20 ticks down, and we got filled pretty quickly. We continue to rinse and repeat this process. We're marking levels, seeing where their imbalances are, and if there are any, and if there's any breakouts in the opposite direction, we're going to stop trading and just observe and see if there's any ranges. Remember, don't get greedy. There are plenty of opportunities. It's okay to miss imbalances. You're going to want to look for high probability trades. Remember, we're scalping. You're looking for as much alpha as you can get, as the highest success rate you can get. You do not want to take losses, as it is a 1-to-1 risk-reward ratio strategy. When you lose, you've actually just moved yourself back an entire step. It's not like a regular strategy where you have a higher than 1-to-1 risk-reward ratio. You're going to want to avoid losses as much as possible, even if that means missing out on potential profit. We did end up being right about that level of range being formed after it bounced off of that level and broke out in a long direction. We didn't see a real pullback and an actual trend start to form long until we saw a range form. We saw this range form, we saw stacked imbalances, but we did not get entered because we did not arm the strategy since it was in a range. Very important, guys. Don't hit that button unless you are very confident that it is not in a range. But as you can see here, we saw a small little breakout and we decided to arm the strategy. What happened earlier right here in this level that I marked, I saw it. The thing is that the previous bar didn't close above that level, so we decided to not arm the strategy. There would have been an entry there, however, we just didn't get the opportunity to take it. However, if you were watching, you would have seen that we did arm the strategy for long once it closed above there. We were a little bit late. I was actually kind of distracted by looking at whether or not that trade would have filled, that I forgot to arm the strategy, but we do arm it and an entry condition is found. Now, this is a perfect example of a trade that we closed early and we're okay with. We saw that our entry condition, which was that imbalance on one side, kind of disappear there. We end up having pretty much only white numbers on the right side, and then delta starts to continually decrease. We see that point and we're like, you know what, it's not a high probability trade anymore, so we're gonna cut our losses short there. But it ends up working in our favor, and we would have lost that trade if we had stayed in it. So now about 2 hours have gone by where nothing has really happened. However, we're seeing this really interesting regression channel form. We're using the regression channel tool that is in NinjaTrader itself to mark these levels. So at this point, we're just waiting for something interesting to happen. There isn't really a lot of volume, there's not really a ton of movement in either direction, and delta is pretty inconsistent. There's no real correlation with price. So about another 10 minutes go by, and then it starts to break out of that regression channel. However, we're not ready to arm it yet. We see kind of an increase in delta there, and we see a little bit of a price movement. It kind of breaks out and then moves back down. Nothing really that interesting yet. However, we're going to mark key levels on this new small little blocky range there where all of the bars are adjacent to each other. And when we see this, we're seeing that delta is kind of skewed towards the negative at this point, but price is staying pretty similar. Like I've said in my previous videos, this is an example of a delta divergence. We may see a breakout in the long direction. We're not really looking for a short trade here. As I said earlier, the regression channel is moving in that downward area. Unless we saw a violent decrease in price moving downwards, breaking through tons of previous price levels, we're not really looking for a long trade, as slow degradation of buyers isn't really the kind of trading that we're looking for. We're not doing swing trading, we're looking for quick scalps. So at this point, I made a little bit of a mistake. I want to point it out to you guys. Nothing bad happened, luckily, but I was really trigger happy at this point. We hadn't gotten a trade in a while, and I clicked arm long before that bar closed. Please be disciplined in your strategy. See, nothing bad happened to me because of it, but I disarmed it right after because I realized what I did. Make sure you don't do that because it might cost you. But we do end up getting an opportunity right after that when we arm the strategy as expected, once it closes above that range. It enters pretty quickly, and it was a pretty standard fill. Price just moved upwards and hit our take profit. But right as we get filled, another stacked imbalance forms right in front of us. We see that, and this is kind of a manual entry because we arm it and it's already there. So the strategy spotted that, and then it enters on that position. So the way the strategy works is that it's not going to double enter. However, when you arm it, it's going to check and see if there's any stacked imbalances on that bar. And if it's near enough to it, it'll enter you in that direction. But because we entered kind of manually, we got filled one tick above. ES is really nice because it's very liquid. On NQ, you're going to get a little bit more slippage just because the spread is a little bit wide. For ES, usually the spread is only one tick, and with market orders, if you have a really quick connection, you can actually usually get filled exactly where you want to. When we see this point, we had this little, we had a one tick disadvantage here, so we drew that take profit stop loss tool. It's just included with NinjaTrader, and then we set our stop loss to what the standard entry would have been. We don't move our take profit because we do want to secure the same amount of ticks. However, we're a little bit more skewed in the loss direction, which is fine. I'm okay with that. I have a little bit of cash to burn here, just in the sense of improving the reward rate at this point. But as you can see, it's kind of a little bit of a long, more drawn out trade, but we end up getting filled. Right after that, it kind of entered another range at this point, and we're getting that little bit of a U shape, and I don't like to trade those. We are in probably the most calm time of the day, which is around 11 a.m. my time, which is Pacific Standard Time. So at this point, you know, we're already up $3,800, and I think it's okay to just step away from the computer there. So now I want to talk about the Polarity ATI that I was using in this video. So we sell the system on our website, which is in the description, and it includes a full instructional manual about how to trade the strategy, both with the automated aspect and manually. It includes a full breakdown on how to find the best settings for the current market regime and how to continuously hone your edge. So if you guys are interested in that, head over to our website. However, the main goal of this channel is to educate, so to trade the stacked and balanced strategy, you don't need our automated system. We teach everything for free on this YouTube channel, and you can manually trade this with any footprint chart. But I wanted to make it more accessible to everyone, especially you older guys who might not want to be staring at a screen intensely on full alert for 6.5 hours a day. This type of system should reduce the mental workload you need to perform to be profitable and allow you to focus on being the decision maker when trading order flow, which really is the key to being profitable long term. So now to talk about the future of the content on this channel. What I really like about this kind of trading style is it makes my job both as a trader and a content creator a lot easier. I can pump out more content because I am not as hyper fixated on watching the charts as I usually have to be. It's quite easy. I simply make decisions and I tell the strategy when to make those decisions, and it does it for me. I can kind of be a little bit more relaxed when trading, and I can be a little bit more distracted and maybe have more content for you guys without having the detriment to my trading experience. Because, you know, as much as I love creating content for you guys, the number one priority for me is to be profitable as a trader. But I also want to tackle some of the questions about doing live streams and all that. The thing about trading for me is that I like having flexibility. I think doing live streams daily, not only does it make you rely on me to be profitable, which the goal here is that when I step away from the channel, you guys don't immediately lose your entire quality of life, but to teach you guys and give you that long-term success that you need 10 years in the future, stuff like that. But the thing is that's not going to happen because I'm not going to be live streaming in 10 years. I plan on doing other things with my life than trading, and I'm very transparent about that. But I want to teach you guys what you're really missing out on and what retail traders aren't teaching you. This is the way institutional traders get into the market. They actually look at data points that retail traders usually don't have access to. If you have access to order flow, you have access to more data than 99.9% of other retail traders on the market, and you're competing now on the same footing as institutions. But anyway, I think that this style of video where I show you guys when not to enter should clear up a lot of the misconceptions you guys have about this trading system. Should show you guys some more information about when not to trade, which is a very important aspect of trading. But that should cover all the bases that live trading would consider. I think that live trading content would be very dull. I wouldn't be really giving commentary, and frankly, it just doesn't really fit the style of my channel. I like having quick bites of content where you guys can learn a large amount of information in a short period of time, and I can appeal to as many people as possible. I want to bring as many people into this order flow space as possible because, frankly, oh my gosh, I hate these systems that just don't work. You're never going to be profitable trading with these stupid MACD indicators or Bollinger Bands and stuff like that. The market changes so much that it might work in a certain regime, but it's not going to work in the next. But order flow, as long as auction systems exist, it will continue to have an edge in markets. If you guys enjoyed the video, make sure to like, subscribe, and leave a comment. And as always, thank you guys for watching, and I will see you guys next time.